Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive doji cross yesterday that breached below but still closed back up right on the middle time, currently at 113.15 of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action and drops away about 5 ticks a day. Interestingly, the low of yesterday was right on the neckline, currently 112.68 of the April to May reverse head and shoulder pattern. An unusual choice, but still a legitimate one. Just a reminder now that all this comes in the shadow of September's monthly key reversal down. So far today, a reactionary start with a small move back up, and the action so far based on the middle time once again. Cable, aka sterling against the US dollar. After Friday's bullish engulfing pattern that was followed on by 2 days of indecision, we finally had a move yesterday, and a seemingly significant one as well. It was an unexpected key reversal up that punched up through the September 2020 high at 134.83, but then closed on it. Overall, we are still in between the middle time below, currently 132.39, and the upper time above, currently 135.84 of the early September to late October bearish Andrews pitchfork, though more towards the upper end of the pattern. We're also still quite a way below the broken July to date sideways triangle, for which we have the targets here down around these sort of levels onwards. The initial target X in the 134.90 area has already been achieved twice, whilst the secondary target X1 in the 132.65 area, well, that looks a long way out of reach right now. Now, I'm thinking of retiring these two targets, as the market seems to have done enough even if target X1 has not been achieved. I reckon I'll review again after this weekend. A couple of final points. I have droned on interminably now about the longer term whole of 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down, and the last 2 weeks action also revitalized this idea. Enough that I'd mention again that target I had originally placed below, an initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. Now, last Friday saw target X2, the initial target for this pattern, reached. As you can imagine, target X3, the secondary target, is so much harder to reach. And I might also review this target with a possible retirement after this weekend. Now, so far today, a slightly higher open and a move up over the September high and towards testing the 2019 high at 135.16. And thus, I suppose, a suitable follow-on to yesterday's key reversal up. However, right now, the test of the top side has been unsuccessful as prices have peeled away back towards the September 2020 high. Euro sterling, a fourth bearish black crow yesterday as prices dropped down to finally test the new-ish lower trend line, currently at 83.87 of the reincarnated June to date expanding broadening wedge pattern. As I've said recently, I've had some doubts about this whole idea right now, and this was and will continue to be a good test of this wedge pattern. Meanwhile, just below we have another support line, one that proved to be quite supportive back in October. It is the old upper channel line from the broken bear channel originating from May, and that's currently at 83.75. So far today, another test of the lower wedge trend line again today, but the market has seemingly gained some sucker from this and has started to move back up, if only by a little. It's not enough to call it a bottom, but then again also not carrying on lower as it has done in recent days is also a sign. US dollar against the Indian rupee. A day of justs yesterday. It was an immediate key reversal down, just, and at the same time a bearish engulfing pattern, just as well. All this was prompted by the squishing of the market in between a strong overhead early October to date downtrend, currently at 74.47, with the 50% Fibonacci of the April 2020 to February 2021 move just above at 74.63. Meanwhile, below, we had the well-publicized quartet combination of the short-medium moving average, currently at 74.36, the 50% Fibonacci line of the February to April 2020 move at 74.26, the medium moving average, currently 74.29, and finally the broken downtrend and trendline combination of the April 2021 to date move, currently at 74.28. This quartet of supports had previously been seen late 2 weeks ago trying to hold the market up and failing. Well, they failed again yesterday with the market closing below all of them. Now, so far today, an unusual higher opening market, but then a significant try low that was halted upon approach, so not that near an approach, to the same support that caused the dip early last week to fail. It is the slowly rising long moving average, currently at 73.88, with the nearby 50% Fibonacci line of the whole of 2020 at 73.84. Even just coming close towards these two seems to have provoked a bullish reaction, though we're still down on the day, but only a little. Well, almost we're back up again, I think, on the day as well, though not on from the opening. It's a indecisive, well, possible. It could possibly be a dragonfly doji, maybe a bull hammer. I'll have to see where it closes tonight. US dollar against the Brazilian real. An indecisive though long-legged doji cross yesterday, right on the middle time, currently 5:50.26 of the late July to late August bullish shift pitchfork. This pitchfork continues overall to provide a reasonable indicator of the bullish angle of attack. Below we have some interesting supports. The not so good short medium moving average currently at 544.33, and the two adjacent 50% Fibonacci lines, the May to June move at 539.28 and the whole of 2021 so far at 538.46. Finally, below all these is the ever so slowly rising long moving average currently at 536.30. You may ask, why do I mention that? Well, the reason I've mentioned all these supports is specifically to get to this long moving average, as just below it we have the rising medium moving average currently 533.69, which may, as soon as the middle of next week, possibly make a golden cross with the long moving average. Yet over this, please remember, just remember, as I've recently repeatedly stated, all this is in the shadow of the weekly key reversal down from 2 weeks ago. US dollar against the Mexican peso. A bearish dark cloud cover pattern type yesterday that looks to have capped the small rise we saw this week. I suspect that it was the market's earlier proximity to the interesting overhead 38.2% Fibonacci line of the big 2018 to 2020 move at 2090.39 that capped the rise, much as it has done or had done in early November and early October. The pullback stopped short of the lesser Fibonacci line at 2060.62 and the close by the 50% Fibonacci line for 2021 so far at 2058.49. Now, stepping back a bit, the action since late September to date has elements of a diamond pattern, but it just isn't that well defined to call it such. And this requires some more thinking and pondering. Anyway, we still have, at least for the moment, on the top side targets for the recent broken June to September descending triangle. Primary target X in the 89.20 area has already been achieved, though there seems to be diminishing chance of success of achieving the secondary target X1 in the 23.5 area. All these recent actions should be seen in the shadow of the weekly key reversal up made 3 weeks ago. So far today, a slightly lower open and a dip to test and seemingly gain ammunition from the lesser Fibonacci line at 2060.62 ahead of a move back up. Right now it looks like a bit like a bullish thrusting pattern, possibly moving towards a bullish piercing line pattern, but there's still plenty of time to go. Thank you for listening. The short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.